A very good afternoon to all our esteemed guests and distinguished panelists. The wait is finally over and we are all set to commence the first panel discussion of the day. I am Vagisha Gupta.
And I am Ranveer. PGDM students at National Insurance Academy are delighted to be your host for today's well-esteemed presentations.
Before we begin, let's take a moment to extend our sincere gratitude to our sponsors, whose unwavering support and commitment have made this event possible. Our titanium sponsor is Life Insurance Corporation of India. Platinum sponsors are General Insurance Corporation of India and the New India Assurance Company Limited. Our silver sponsor is AIC of India. We express our profound appreciation for their invaluable contribution.
Ladies and gentlemen, we will begin with a detailed theme presentation for the Insurance Summit 2025, followed by the introduction of our panelists and then the panel itself.
This year's theme is Product Innovation, Reimagining and Realigning. In the light of government's visionary goal, Insurance for All by 2047, under Viksit Bharat, product innovation becomes paramount. It is a critical pillar and will play a defining role in achieving this mission. Meaningful discussions around this are therefore essential. The theme for our first panel discussion is Reimagining Retail Insurance, where we will explore how the industry can simplify products, enhance digital experiences, expand coverage, and adopt smarter pricing. To guide us through the many dimensions of product innovation, we have the expert with us. I invite Mr. Amitabh Ray to please join us on the stage.
Thank you, sir, for joining us. Before you take the stage, please allow me to briefly introduce you. Mr. Ray is the Chief Executive Officer of Swiss Re India branch. Based in Mumbai, he is responsible for driving Swiss Re's non-life reinsurance business. Prior to this, Sir served as Chief Underwriting Officer for Swiss Re's India branch and Head of Property Treaty Underwriting for Southeast Asia, India, South Korea, Hong Kong, and Taiwan. Sir managed regional property treaty portfolios, developed alternative risk transfer solutions, and designed parametric and index covers for public-private partnerships. Sir holds an MBA from Melbourne Business School in Australia and a master's degree from Indian Institute of Foreign Trade.
I'd like to invite my colleague to extend a warm welcome to Mr. Ray by presenting him a floral bouquet. Sir, the stage is all yours for the theme presentation.
Good afternoon, everyone. It's just a real pleasure to be here. And you can judge by that because I'm almost wearing the uniform, which most of you are carrying. That's actually by coincidence, but I'm pretty happy about that. First of all, a confession, then we will start the presentation. So I've been asked to speak about reimagining retail insurance. And by profession, I'm a wholesaler of insurance because I'm a reinsurer, right? So I take this topic with all sincerity and the challenge you've provided to me. And let's see if I can do it some justice. But I thank NIA for inviting me and throwing up this challenge. And let's work on this theme together, reimagining retail insurance. Yeah, so a lot has been said this morning by our erudite speakers uh, about innovation and retail insurance. Innovation in retail insurance is no less. Let's look at the main issue here. Why insurance? Let's answer that first, and then we'll get to the other problem. Basically, with Viksit Bharat, insurance for all by 2047, we have no choice but to increase the penetration of retail insurance in India, right? And here are some numbers that we need to bear in mind. And this is for the guys who are wearing the uniform, the other side of the room. So today we have a penetration of 1% of GDP in our insurance, non-life insurance. And we aim to increase the penetration to 2%. Now this sounds 1 to 2, right? But look at the numbers below. Today's non-life premium is 36 billion US dollars. So I'm not using crores because the crores will be like huge. It's about 3 lakh crores is our premium today. But if our penetration is 2% of GDP in 2047, and Niti Aayog says we will have a GDP of 30 trillion by that time, by multiplying those numbers, we get an industry size of $600 billion in 2047. So we all have to play our part to get from 36 to 600 billion. It's 16.5 times the number. It's humongous, and I think we need all of us to get this done. And we do have to reimagine a lot of the stuff that we will do. And why is this important again? Because in our country, the penetration on the retail side is still very low. I think home insurance, unless you're taking a home loan, there's absolutely no purchase of home insurance. It's a problem to solve. I think 2 to 5% are covered under home insurance, that through the banks. So we have 95% of under penetration. Similarly, on the motor, we have, still third party, probably only 40% of the vehicles are taking insurance after the first 4 or 5 years. So the problem is ahead of us in the sense to solve, but we have a huge market potential that we need to garner. So let's start with the agenda, which I wanted to talk about today, on reimagining retail insurance. I'll be talking about reimagining the insurance industry itself, which is basically moving from product to service-oriented insurers. We will then talk about what are the retail needs of the future and today, which is around climate change, around cyber, around mental health, around emerging diseases, and also pet insurance. I thought that might be something interesting to talk about in the quest for insurance for all as per our government, as our Prime Minister, for Viksit Bharat. So reimagining retail insurance in terms of the customer journey. Today, it's a slide which basically we are talking about aligning a lot of the insurance ecosystem together. Basically, that's what we are talking about. So today we are selling a policy. We are almost pressurizing people to buy a policy. It comes at the distribution point. It's motor. If you take motor as an example, you have actually third party. You will have to buy when you go to the dealer. It's mandatory. The OD is then also part of the policy. You're pushed to buy it, and then it's all forgotten till the renewal is due, etc., right? How can we reimagine the customer journey? Is the consumer of today and tomorrow looking at insurance as a product, or he's looking at something else? How can we entice, excite them? And our view is that insurance is to move away from product to becoming part of a service ecosystem. You have to have 2-3 basic things in place. One is more touch points with the customer, understanding the customer, more alignment of the customer's need, which means changing the policy conditions and terms according to their need. So more dynamic policies along the customer journey, and then evolving with the customer's lifestyle, as well as make insurance almost invisible in the entire value system or the value chain of the customer's journey. So if he has a 5-year on motor, let's say, and I highlight a bit more on the motor part of it, if you look at it, what are the other services within the 5-year of a policy period that the customer needs? And what are the touch points? Let's look at that. He goes for servicing of his car. He sometimes has a breakdown. He basically, goes for, sometimes for the cleaning of the car at some place, et cetera, et cetera. So if we can build an ecosystem where the touch points with the insurer is more frequent than only the annual renewal, and that comes via the service ecosystem that can be reimagined, which is like prevention services, which I think was already talked about through the monitoring of the car parameters. Engine breakdown, for example, was talked about. The breakdown service when the car really breaks down, trying to assist at the time of if a car is stolen, et cetera, et cetera. The point is, if we reimagine the customer's journey across the next lifetime of the car, which is approximately 5 to 10 years, embed a lot of service, and insurance just becomes part of it, where there's constant touch points with the customer. Maybe we will make insurance a bit more exciting, and the boredom which was talked about earlier in the room will slightly disappear. So let's look at insurance in a completely different way going forward. It's not easy to talk about embedding a lot of stuff and making consumers excited, but this is the journey in which consumers are asking. They're not asking about a product today. They're asking about what can I get out of the product that you're selling. And they're not really unwilling to pay. It's just that they don't see value when they buy only insurance once in a while. So that's the mindset, but also the entire ecosystem that we need to think about and change. I took a bit of time here. I will go a little quicker on the rest of the slides. But that was basically the theme in which I wanted to, sort of talk about. Now, I talked only about motor, but this concept can be extended to the entire lifestyle and the life journey of any consumer on the retail side. So insurance companies have to understand the customer as his life journey, not just sell a motor, sell a health product, sell a home, but entire life journey of the consumer can be collapsed together, and lifestyle insurance should be what we should try and aim at selling to any consumer. Now, there can be modular ways of selling it, but the most important point here is that you're attached to the consumer on a constant basis. You're getting data. Today, technology has changed so much that we can, advise, we can interact with the client more and more. He should not feel, and the customer is also willing to interact, how much time we spend online, right, daily. Why not spend about 0.1% of it on thinking about insurance? But you have to excite somebody to think about insurance through services, through exciting them about their lifestyle journey. So generally, insurers have to move away from selling, again, products, but they have to sell services, and they also have to sell a lifestyle journey on health, education, their home, living, etc., as part of how we can basically make insurance more interesting and exciting, and then go for higher penetration of insurance. One of the trends is, which I think we should take good solace about, there will be a lot of skeptical thoughts. You're trying to embed or suggest to embed a lot more services. This will cost a lot more. But actually, if you look at this, with the per capita income increasing, we are in a state where more and more people are demanding higher quality services. So this is where we need to move the ecosystem towards. One size will not fit all. And then we can, of course, talk about hyper, let's say, customized product, etc. How is it different from today? Today, as I spoke about, we have insurance companies which are digitalized, which means they have digital processes. But tomorrow will be basically all companies will become in the quest of service providers and being part of a larger ecosystem, become purely AI-driven insurance providers, where data will be constantly coming to them from different sources of the ecosystem to modify their product, to resell the product, to remarket it, to excite the customer, to know about the customer's next steps, as was talked about. And this is where we have to, because we have to move with the times going ahead, where every other part of the ecosystem is on time, on demand. Why not insurance? And anticipatory, like the car is anticipating some of the breakdowns. Insurance need to anticipate a little bit with that sort of philosophy, what's going to happen, rather than pay after what has happened. With India's rising retail exposure, NatCat will be a catastrophe insurance for homes, and for consumers will be absolutely important to have with climate change. But how do we increase the penetration? How do we increase the awareness of a risk which is increasing day by day, but people still do not realize as a consumer, as a retail? That's a challenge maybe we can discuss at the panel. Today, this slide I'm talking about is around the urban hotspots, which is a lot of risk, natural catastrophe risk concentrated around the urban areas in India, but we still do not have that sort of awareness for people to buy catastrophe insurance. So we have to reimagine NatCat retail insurance. One of the answers to that could be parametric products. Design parametric products which are easy to handle and easy to service, can buy together as a society or a group of people, and of course raise awareness of these at the government and local cluster level. Cyber insurance is another thing we need to imagine as a retail consumer, for a retail consumer. And one of the points I wanted to talk about is that cyber insurance for retail consumers is a highly evolving area, and it can cover a lot of these online exposures that a person has. But the important thing I wanted to put forward is on the slide that's coming next, is cyber has to be reimagined to be sold slightly differently. Just like one buys a PA policy for one's physical self, or is sold one can also get a policy for one's virtual self, which is the personal cyber. And here I have tried to compare between a PA policy and what's a personal cyber policy, the analogies, what is protected. Body and health on a PA policy, but in personal you protect your identity, your devices, your money, in motion, for example. So on the health and accident side, you have prevention. Similarly, on personal cyber, you have prevention through strong passwords, anti-malware, et cetera, et cetera. So the point here is about selling the product, reimagining how we sell the product. That's all I wanted to kind of think through in this slide. One of the very important things that we need to talk about in terms of retail is on mental health, a very important topic that's coming through in our times, because mental health treatment, mental health, deterioration of mental health, the propensity, the figures are quite stark. Here's somebody of my team has said that about, as per published stats, 10% of adults have some sort of a mental sort of disorder. It could be very minor to something major. And it has a huge implication in terms of productivity of our economy. But we also need to reimagine how mental health can be sold compared to what we sell as normal hospitalization policy. And there is prevention, there is treatment, and there's continuing care. This mental health treatment needs a lot of reimagination in our view. So for mental health, just like cyber on the other side, we are covering something which is not very, very visible, which is not physical. So it needs to start again back to what I had started with about selling a service which is attractive and bundle it with the normal health policies. That's the point I'm trying to make here. The last point, more or less, from my side is reimagining emerging disease cover beyond hospitalization. Today, we have a lot of diseases which are hitting us, but not necessarily leading to hospitalization for a long time, but the recovery point is, period is quite high. Some of them you know very well, as those chikungunya, H's influenza, etc., dengue. And these sometimes they need hospitalization, but sometimes they don't. Mostly they don't, but the recovery period, as we are witnessing, are very long. How can health insurers also reimagine some of the treatments in terms of coverages and support in terms of payments to cover these in the recovery period? And last but not the least, pet insurance. We have to reimagine because we have a society which is getting more lonely, so they are, of course, taking a lot of pets into their homes, and then pet insurance is going to be a booming industry in our view, but for India, we have to think about how we can reimagine pet insurance than the pure accident and illness and OPD cover. There are new covers which we can design for pet and how we can pay. So that's what I wanted to just set the scene. In the end, just raise a few questions. Retail customers face increasing risk across the board, but are they aware? Because the penetration continues to remain low. Would a comprehensive cover be more attractive? Bundle insurance to raise penetration. Can we reimagine insurance as such almost to the end when AI-driven insurance is in place, that people are almost given to price their own risk, and it's your obligation to accept or reject their price, but you give the power entirely to the consumer to price their own risk with all the data that you're collecting and giving him. And there are versions of these around, but we probably can think a little bit about this. And what's the role of government and regulator in all this? Because with so much data coming through, data privacy becomes a big question. customized products, changing dynamic pricing of products needs a lot of regulatory tick boxes to be covered. But that's a good question to have if we can get there. Thank you very much. I think it took a bit longer than necessary, but thank you. And I must, as we say, in the OTTs, no animals were harmed while making this presentation. Yeah, so thank you.
Thank you very much, sir, for the very insightful presentation. Your presentation has brought forward several valuable points, and I'm certain it will lead to enriching discussions with the rest of our esteemed panels. Sir, I request you to be seated. Continuing with the panel and the event, we now welcome Mr. G. Srinivasan, Galaxy Health Insurance, Mr. Ratnakar Patnaik, LIC of India, Mr. Sarbvir Singh, PB Fintech, Ms. Preeti Chandrasekhar, Institute of Actuaries of India.
Thank you so much, respected panelists, for forming the dais. Let's pause for a moment to shine a spotlight on each of our incredible experts and hear a bit more about them. Firstly, we have Mr. G. Srinivasan as the moderator of our first panel. Sir brings over 4 decades of experience in the general insurance industry across India and abroad. Sir has served as CMD of New India Assurance Company Limited from 2012 to 2018 and United India Insurance Company Limited from 2007 to 2012, as well as MD and CEO of New India Assurance Company Limited, Trinidad and Tobago. He also led the National Insurance Academy as director for more than 4 years, guiding excellence in insurance education, training, research, and policy advisory. Mr. Srinivasan has held leadership positions in General Insurance Council, General Insurance Public Sector Association, and the Insurance Institute of India, and has been a member of several IRDAI and IFSCA committees. Sir has also been conferred a fellowship by Institute of Directors.
We are also honored to have Mr. Ratnakar Patnaik, Managing Director of Life Insurance Corporation of India, joining us for the discussion.
Our next panelist is Mr. Sarbvir Singh. Mr. Singh has over 25 years of global experience across corporate leadership roles. Currently, he is the Joint Group CEO of PB Fintech, India's leading insurtech platform. Prior to joining the group, Sir was venture capitalist and also served in senior leadership roles with digital and media companies. Mr. Singh was most recently the managing partner of Waterbridge Ventures, a leading early-stage venture fund. Sir has also held leadership positions with JP Morgan and Network 18 in India, Citi in New York, and Immersion Electric in Hong Kong. Sir is also an IIT graduate and holds an MBA from IIM in Ahmedabad.
Our next esteemed speaker is Ms. Preeti Chandrasekhar, President, Institute of Actuaries of India, a seasoned insurance and pension leader with over 3 decades of experience spanning industry and consulting. Ms. Chandrasekhar currently serves as the first elected woman president of the Institute of Actuaries of India. Ms. Chandrasekhar is a fellow of the Institute of Actuaries of India and Institute and Faculty of Actuaries UK. Ma'am has authored several national and international papers and serves on multiple government panels and committees. Previously, as India Business Leader for Health and Wealth at Mercer, Ma'am advised leading organizations on employee benefits, risk management, and pension design. Her career includes pioneering work in pension transformation, actuarial valuation, and risk-based capital frameworks.
Before we begin the discussion, I would like to invite my colleagues to extend a warm welcome to our dignitaries by presenting them with floral bouquets. Now, I would like to request Mr. G. Srinivasan sir to kindly commence the discussion. Sir may also take up some questions from the audience towards the end of the discussion.
So dear friends, good afternoon to every one of you. First of all, thank National Insurance Academy for giving me this opportunity of moderating this discussion. Also gives me very immense pleasure to meet all the students of the academy with whom I very closely moved when I was here for more than 4 years. I'm conscious of the shortage of time, so I will make my opening remarks very, very brief. We had very eminent speakers talking on this subject during the inaugural. Also, we had Amitabh presenting very extensively on the retail part of the insurance product. How should we reimagine and realign? I personally feel that insurers should never imagine, not even reimagine about insurance products. That's a mistake we have been doing all along. We think that we know what the customer wants. And we have always put ourselves in that position. We imagined, reimagined, reimagined, created products and told the customers, take it or leave it. And this has been the problem of the insurance sector over the years. So I basically feel that we as insurers should go to the customers, ask them what do they need, understand their needs, and then create products which satisfies their needs. There's no better way of, somebody understanding somebody else's needs unless he goes to them. So I think the insurance industry today is completely kind of circled. It doesn't have much of an access to the customers. Even if it has an access, it's at a very junior level whose voices are not heard by the policymakers. So I think insurance industry should first of all design a structure wherein they can understand what the customer wants and I think come out with products. This is my simple view as far as product reimagining is concerned. With this, I will straight away move into the panel discussion. We have very eminent speakers who are experts in their own lines of business. So I have a first question which I will ask every one of you. This is, of course, follows the same theme which I just mentioned, that most of the products are insurer-centric, not customer-centric. So, Mr. Ratnagar, I will start from you. How do we make our products customer-centric?
Yeah, once again, good afternoon to all of you. Srinivasan sir, thank you for being the first salvo fired at LIC. And naturally, sir, I strongly believe your initial remarks, the insurance products are insurer-centric. It's not customer-centric. But one more point I would like to add, sometimes it becomes distributor-centric. A distributor decides what to sell, what not to sell, to what extent to sell, and whom not to sell. So I strongly feel, sir, to address this very critical issue, we need to have very good training programs for our distribution channel. Unless they're trained, and I would like to repeat what I told my initial remarks, that information symmetry, unless the customer is equally aware of. And today, to be very honest, having worked for 35 years in this organization, across 10 states of the country, I have that feeling the customers do not know much about the product they do buy. Only few know, and this is not a desirable position. This is what my initial remarks.
So Sarabis, I mean, you said distributors also design products. Customers don't understand. How do you?
So first of all, good afternoon to everyone, and on behalf of Policy Bazaar, I want to thank you for inviting us on such a distinguished panel. I think a lot has been discussed, I think, in the morning also, and I think Sir has also said, Policy Bazaar was started 18 years ago with exactly this premise that we should not be insurer first or distributor first, we should be customer first. And we have tried to live up to that ideal for the last 18 years. 2 crore people have bought policies from us, and I'm not sort of sharing this information from any other perspective, but just to say that we speak from a place of responsibility and of place where we have dealt with customers. I think the first thing that we must recognize is that the products that customer need, right, whether it's term insurance or health insurance, need to be communicated clearly, because these are risk products, these are protection products, where adequate disclosure, etc., is extremely important for both sides, because otherwise at the end you will not get your claim, and that would be a huge problem. The reason I'm just mentioning these points is that when we talk of distributors deciding products, or we decide, insurance company deciding products, it is up to us, right? It is up to us, not up to the customer. I would like to submit, in today's world where customers are directly dealing, I think there was a discussion where we said that mutual funds now, the AUM is the same as the life insurance industry, despite having started literally, 20 years ago or 25 years ago. So the point is that when there is a desirable product, people get there, the commissions paid on mutual funds are very small, and yet the industry is vibrant and is sustainable. So I think the first point that we have to remember is that it's not about the distributor, it's not about the insurer, it's about the customer. And if we design products that are good for the customer, the distribution, commission, the cost of doing business will come down. And I think that is something that is sorely missed in this debate, where we are always focused on one part or the other. So the answer from our side is very clear. We have tried to help the insurance industry build products that are customer-centric, which are useful for the customers. I want to give an example, because Tripathi sir raised the point in the morning that should we give different treatment to drivers who drive differently, right? I think it's a very, very fair point. Why should somebody who drives rashly pay for somebody else, the reverse, somebody who drives safely pay for somebody who drives rashly? So today some insurance companies have introduced such products where, depending on your behavior, you do get sometimes it can be in the form of a renewal discount, sometimes it can be in the form of early discount. Similarly, in health insurance today, there are many products where if you walk every day, or if you subject yourself to certain tests, your premium does go down in the following year, etc. So I think, just want to sort of not speak too much on this, but I think there is a lot of opportunity. I think we must learn from other industries which have done this, and I think if we focus on the customer, the entire cycle will actually work much better.
Yeah, focus on the customer. Preeti, I would request you to.
Thanks. First of all, I would like to thank NIA for inviting me to share my thoughts in such an august panel. I think if you just compare with other products or other industries, insurance is not easy to sell. Let's be honest. We are selling a promise, and promise promise of a certain amount that gets paid on the happening of an event. Now, unlike maybe a cell phone or any of the consumer items, it is difficult to sell, and people realize only when they have seen, either they have sort of got the claim at a point in time, or they have seen somebody else go through this financial loss. So let's sort of at least understand it's a different animal to sell. But I think looking at customer-centric products more than insurance company-centric products, I think somewhere we will have to marry and I'm just taking it a step ahead and say, what should go into the design of such a product. We have to look at quant data, of course, which we are already having, but there are certain aspects relating to qualitative data, like through surveys, through any other public opinion or any other forum through which you understand what the consumer needs. You have to go through the behavioral economics aspects also. And I think there has to be a change in the mindset from talking only about risk and financial stability for the insurance company, and I'm wearing the actuary hat.
That's the reason why I asked this question to you, because most of the companies is actuaries who design the products.
So, no. So I'll just come back to that. So that's one, we have to change the mindset. Second, I think most important is collaboration. Collaboration within the organization. You often hear the marketing people coming back and saying, the actuary is not listening to us, and the actuary comes back and says this person wants to just sell everything and anything. How do we manage the financial stability? And then you have the regulator telling you have these RBC norms, you have all these disclosures. So it's a complex thing, but can it be done? Yes, it can be done. All of us need to change our mindset to be able to do that.
Amitabh, your opening comments.
I'll be brief this time.
Yeah.
So I have only something to talk about from a claims angle, right? Explain to the customer what happens if there is a claim, what happens if there is no claim. Make the relationship work that way, because let's say the frequency for motor car is 3%. So 97% don't have a claim, right? So explain to the customer what will you do if you don't. We only attach to them at the point of no claims bonus at the time of it. During the year, nothing else happens. But maybe something should happen as a touch point if there is no claim, right? Build that journey, and you embed all the services and products that we talk about, sell them as part of, but have that customer journey not just every 12 months, whether there is a claim or not, right? That's what, but be very clear about what you're going to do if there is a claim. Build that trust.
So, Ratnakar, I come back to you. So, all of us agree that product should be customer-centric, not insurer-centric. But, one of the challenges in especially in retail penetration, of course it's applicable for commercial as well, is do customers understand the policies? Because our policies are so complex. I have gone through a life insurance policy, I am not able to understand anything. And I've also gone through health insurance policies. They're also very difficult. So how do we simplify policy? Because this is something the industry has been talking for years and years, but done nothing about it.
So, sir, I had mentioned one point, being a simplified product and feature rich. It is a dichotomy in itself. You can either give a plain vanilla product, term insurance, or endowment, or a money back in between. They are the few types which can be told simple. If you want more features, that cannot be treated as simplified or simple policies. But one thing, sir, all said and done, I agree with your point. The people who are insuring in India, their education levels, their understanding levels, more so about life insurance. In many places, even today, when I ask a taxi driver while in Mumbai, have you taken life insurance? वो तो बोलते सर गाड़ी का LIC है लेकिन so this is what the people understand about life insurance. So the awareness, and to be very honest, to be very pragmatic, it is not so easy and it cannot be achieved so quickly. That way I would like to sound practical. It will take time. सबसे पहले life insurance campaign we have started. Life insurers all put together, and that is just baby steps towards this big mission we have in front of us. Unless the customers are aware of, even in villages of this country, the policies which the agent subscribes, the customer buys due to some obligation he has, or he should have an insurance to get a housing loan somewhere. So these kind of things, unless the customer awareness is increasing, and once again I repeat, it is a very Herculean task, possible though it will take time.
Yeah, so I agree it will take time for survey this. But has it started is my question. Because we still use very difficult legal language. I do agree with you that, feature rich, the policy will be longer, but it can be simple. As somebody who's facing the customer day in, day out, how do you handle this, and what should the industry do on this?
So actually what we have found is that, especially I just separate investment products on one side and protection and indemnity products on the other. What we find is that customers actually do not understand anything beyond the fact that they are paying a premium and they should get a claim. They are not able to understand. In fact, the industry spends a lot of time in health insurance on building products with restoration, unlimited restoration, multiple year restoration, all kinds of things. But if you ask a customer, they are unable to understand any of that. In fact, most people, if I dare say, even in the industry, are hard pressed to able to explain their own policy as to how the restoration feature will work. So how can we expect a customer to understand? So actually, if you ask me, customers are very straightforward in their approach. They say that if I paid a premium, I should get a claim. And that is the part where we get lost, because the products that we make are extremely complex many times, and in my opinion, needlessly so. And there again, I would say that we have a part to play in it, and we should be careful. I think the customers, the challenge, however, is to reduce the claim dissonance, which means that to say things like, this was a pre-existing condition, or you did not tell us this, or you did not tell us that. Now we all understand that obviously there is a cost to everything. So I think the key thing which we have to organize is that the customer also has to be brought into this equation. And I'm here talking more about health insurance than anything else, that the customer also has to play a role. And I think in the morning we discussed the concept of deductibles, concept of in another context. But I think it's very, very relevant to health insurance that everybody has to play a part in it. The customer must have a skin in the game. Obviously, the hospitals must have some skin in the game. The insurer must have skin, and so should the distribution platform. Because once we have everybody aligned in this game, then actually the whole thing will work much better. As consumers, we don't expect that every time we go out to eat, we should be allowed to eat in a 5-star hotel, right? Or in the most expensive restaurant in town. We understand that we have different budgets and we can only afford certain things. The same thing has to be true of healthcare. To expect that every person should be allowed to go to the most expensive hospital in the city is needless, and in my opinion is completely unaffordable. There can be no system where this works. So I think the answer is very straightforward. Consumers will tell you, if you ask them, that they don't understand any of the very difficult features. They only understand, I have paid a premium, I should get a claim. I think it's incumbent upon the industry to figure out the rest, because expecting the customer to understand all this is frankly not possible.
So if the customer doesn't understand, then he is going to come out with grievances. He thinks that everything is insured in his policy, and later he finds that something is not covered. There is a deductible, PED you mentioned. So how do we solve this? Because trust deficit is a major issue in the retail space. Because why customers don't take, today people understand there is something called insurance, especially COVID has created that awareness. But what they are not sure is, if I take a policy, will I get a claim? Will the insurer come and help me? We help all the time, but then there's a perception, which I personally feel is because they don't understand the product.
So I would suggest a slightly different view, that I think consumers do understand basic things if they are asked. I think many times the key is disclosure. Do we ask them the questions that, what existing diseases do you have? Actually, the regulator has made a lot of these questions quite simple, right? The rules are simple now, that in the last 4 years, have you been diagnosed? Have you been taking any medicine? So I think if we ask those questions honestly, it's also up to us to ask those questions honestly, record those responses, and then go forward. I think many times what happens is there is a temptation, right? Because I think as ma'am said, you are paying money first and you're going to get the service later. So there is a temptation to say, okay, fine, don't disclose this, we'll take care of it, or I won't be there to take care of it, so why do I care? So I think to your question, sir, as you know, I think the main thing is that we have to ask the questions and sincerely record the answers. And if we do that, then I think, because what we've seen, sir, is that actually consumers who are not well, they are the ones who understand insurance the best. Because they are fully aware that what is going to happen if we do this or we do that. And they are actually probing the system to see where they should enter. So I think if we are able to maintain a constant vigil, then I don't think that can be managed.
So I don't know whether there will be a day where there will be a 2-page health insurance, 1-page homeowners insurance. I think that's when the retail is, because we have seen, for example, the Pradhan Mantri Suraksha Bima Yojana. I mean, you had a very simple, crores of people took that policy. Maybe I think we need to reach that stage at some point of time. Preeti, I come to you on, even Amitabh mentioned that, should insurance products only come into play after somebody has suffered a loss? Could it be more proactive in terms of prevention or in terms of various services? Do you think it's a responsibility of the insurers to solve a problem rather than just give a financial compensation after a loss?
No, I completely agree that insurers should not step in once the event has happened. I mean, then it sort of defeats the very purpose of insurance, right? Insurers have to play a larger role in educating people, definitely. And what is right now happening, some basic necessities, like motor compulsory, home may be compulsory to some extent. So we do what is just about mandated. And it is again a trade-off for people between, do I spend the money here? They would love to spend on mutual funds, I'm sure, because the return is evident, Here, you're just selling a promise, nothing tangible. The returns, you do not know when it's going to happen. So there's a lot of uncertainty. Some of them are long-term. So yes, insurers have to do a better job in actually communicating, educating people. And, talk of simple products with no bells and whistles. I may not need all of it. Very simple products to start with. And as sort of the person gets more mature into the understanding and gets more mature into understanding the financials around that, then you sort of build in the complexities. And they know what they're getting into. But I think insurers have to play a big role in educating people, especially some of the catastrophe insurances, etc. I mean, there are enough scary stories around, right? And I don't say that you scare people further to buy insurance, but somewhere we have to spread the awareness with some examples which are live, which they can relate to. I think that's important.
So, Amitabh, I just, go ask the same question in a different way. For example, morning the member was mentioning that, he in fact gave a lot of innovations for all of us to do. Yes. One is motor is not just, covering the vehicle or a liability. You are solving a mobility problem. Correct. Health is you are solving a wellness problem. Correct. So what should the insurer, of course in health the industry has done something, but I don't think other areas, for example home insurance, could the insurers arrange some services which can prevent burglaries from happening, which can, extinguish fires, yes. Something like that, yeah.
So that's what I was trying to allude, that, most people will not have a claim, but they still have the risk. So how do we build the service around the risk that is still existing? So you actually, we talked about burglary. So could there be something like, when you're actually going on holiday for a month, when you're most vulnerable, could the insurance company install cameras? You don't have to buy, but you just install the camera for 1 month to monitor. For example, right, this requires, it's a simple example. On NatCat, right, I think the awareness that is required now about the changing climate, or, you being in a low-lying area, or that you're having some freak NatCat events. How about spreading the awareness as part of the insurance campaign to get through the consumer? But overall, if we do not make the product more and more customer interactive, we are going to fail every time. We tried every time and we fail every time, because we're just not talking about what the customer needs, as you say, during their journey. That's what we had. And today, technology is able to give us that data points to be able to do that, right? That's the difference that we have in trying to reimagine insurance. Without technology that is available, we wouldn't have been. But we can now.
So, Amitabh, I'll just continue. You mentioned the term climate.
Yes.
So, climate risk today is, assuming a lot of importance, and we have seen in natural catastrophes, the protection gap is more than even 90%.
Yes.
And I also know that you are implemented the the product in Nagaland,
Yeah.
parametric product. So, do you think that in case of NatCat, there is a scope for retail parametric product? Is it possible? I know you have done it on a group basis.
Yeah. So I would be honest to say that I've been
If you
trying.
say yes, we'll ask for capacity
Yeah.
also from
Yes,
you.
yes, for sure. Capacity is there, but I've been trying this for the last 10 years, okay, to be honest, to get this on. So I think it's the parametric product, in my view, is much more suited when it's a group or it's an area, that is, because to hyper-localize to a person what he needs in terms of a parameter is very difficult. So we can go retail, but it has to be then bought as an affinity group, is what I think. Certain area which is more vulnerable, low-lying, but not completely uninsurable, can get a parametric, but that area has to be covered rather than just one person in that area. This is how I see it. How we will communicate, how will we do it, is difficult. Some retail products like excessive rainfall, which is happening in a localized area, can be hyper customized. But then the other point I wanted to talk about was that some of these services or the awareness needs to come in terms of people having an opportunity cost which is lost. So they have loss of income. So health, right? You're saying I'll give you hospitalization and everything and I'll make you back good again. But there are certain times when you've lost your income or your productivity. So if you try to think about the customer journey where he's also lost some income and he may be more engaged in trying to put himself into that position. For example, his SIP continues. On the term side, if you sell a product where part of it is paid to continue his SIP payments for the next 20 years so that his family can still build their, kind of stuff like that, we should reimagine, I feel.
Ratnakar, I think, so I must, say that there's a non-life bias to the panel. So one area on the life side is we spoke about annuities and pensions, and the reach of annuities and pensions is very, very low. And today people are living longer, and there's a lot of awareness. So what kind of product construct, you need to work with the annuity creators also?
Yeah, sir, basically in my organization, we follow two types of annuities. That is like immediate annuity and deferred annuity. So a person pays premium for few years, he builds a corpus and opts, commutes something, and the rest he invests for an annuity. And there are some immediate annuities, and I'm happy to inform this August gathering, there has been good traction as far as annuities are concerned for our organization. People have got faith because today earlier the minimum age at entry used to be 40 years for an annuity policy. Today youngster, hardly 25 years old, he can go for an annuity policy and the longevity being at 72 or 71. And we are guaranteeing for 45 years, come what may, that guaranteed annuity month after month. So that annuity is guaranteed, so people are interested, and it covers also with spouse, either jointly, and they leave something to the heirs. And secondly, sir, to match this big, large commitment of 45 years, maybe LIC is one of the insurers or others might have just chipped in, we subscribe to 50-year-long papers to meet this ALM challenge. Sir is here. So we start subscribing to 50-year papers. We had requested to RBI, and today we have to necessarily, because that is the need of my ALM requirements. So annuities, sir, there is good traction, but it's not enough. I will put it this way, it's not enough at all. And there is focus from our side on annuities. And as I was mentioning today, as high as 9.5% of Indian population belong to that baby boomers or silent generation, 75 plus age group. So we are cognizant of the requirement and we are working on that.
So Preeti, I come to you on this same, because do we need some product innovation on the annuity side? Like the fixed annuities and those kind of things, I don't know.
Okay, so let me look at the demand side first before we look at the supply side. Demand side, I believe that whether it is annuities or even term insurance, I think many people who are employed have a false sense of adequacy. You know, they think that, like for term insurance, for instance, they will say, you know, sometimes it is maybe 3 times the annual salary or 5 times the annual salary. They think this is like a lot of money. Honestly, it is not. And same way, if you look at the annuity side, many people think that, you know, the company does a lot of coverage. You have the gratuity, you have the provident fund, etc. That pretty much takes care. So I'm talking about the phase when people would start looking at saving. I'm not talking about the phase when the deaccumulation happens. This is from the demand side. And hence you see everybody waking up at the age of 45, 50 when they realize there's not too many years left for service. I'm not too sure what I'm going to do, and that's when people wake up for the annuity. On the supply side, honestly, I think there has to be more innovation from the insurance companies. There is stiff competition from PFRDA now. PFRDA suddenly sort of started a lot of focus on the deaccumulation phase. And you see very interesting products. They're talking about systematic withdrawal plans introduced. So all insurance companies, I think it's sort of almost like a wake-up call that we'll have to do things differently. Returns are nominal. Correct me if I'm wrong. It could be anywhere between a 6%, not more than that. That's hardly adequate. So I understand that we have to sort of invest in long-term securities. Those challenges are there. So somewhere I believe if we are able to look at the demand and the supply side also, we are able to come up with some innovation. And this is my personal belief, that if we go back to the policy makers and say this is what is required, I'm sure we're looking at social security, insurance for all by 2047. There would be some ideas that they will also be open to come up with matching investment products which help organizations also deal with this kind of a longevity we are talking about.
You would like to add something to that? Yeah. So I don't know how many of here have pension except the public sector companies. And this is a message for all the students at the back. Think of retirement products, even though you are, very young, and you may think that it's too early to think of retirement. So Amitabh, I come to you on the cyber. Cyber is today, is a very important. I was just reading somebody was under digital arrest for 6 months, lost 32 crores. So the kind of innovations which is happening on the cyber fraud side is really astonishing. How do we make a cyber retail product? I know many big companies have cyber insurance, though not for adequate amounts. But cyber retail is something everyone thinks that this is not something I have to take.
But as I was talking about that you have to sell it as an analogy of your virtual self. You sell PA as your physical self, sell as your virtual self is impacted either by extortion, or you lost money through your some scam, or you've lost your identity theft, right? It's part of your virtual self. So that awareness and that campaign has to be run. Today, the risk is very high for individuals, and the numbers are astonishing. That's one part. The other part is, how to, cyber insurance providers have to help you to prevent. So the monitoring of your digital health and your preventive health on the digital side becomes also very important. And there are companies, so, there are some people I've already met today. They are providing that sort of service. It's just how we align it together. Because I feel if we couldn't penetrate home insurance that much, probably the way we can penetrate the homes is through the cyber part of individuals. Because they're spending so much time online, today that's the way to get people's, attention.
Sarbir, I think I will ask this question to you on cyber and also home.
Yeah.
See, one is cyber is an emerging risk, home is an existing risk. I mean, what should we really do to popularize both?
Sure. So first, I also want to talk about annuities. Yeah. We are very passionate about them. If you ask customers, the biggest problem with annuity is inflation protection. Their main concern is that they will not get any inflation protection and you're asking them to buy for 25, 30, 40 years. So I think there is solutions to this around variable annuities. There are products which are available. I think the regulator is also considering those products. I think it is time that we introduce some of those because we have, see, while we are a young country, we are also an old country. And the number of people above 60 years is actually increasing at a very rapid rate. So we don't really have a solution because unfortunately or fortunately, the number of people who have pension is very small, right? We are still a self-employed country. We are not a salaried country. Even among salaried class, there is almost no pension. So I think variable annuities, designs like that, which protect against inflation are absolutely required because equity, some portion of equity is the only solution to protect against inflation. So that was, sorry, on annuity.
I would just like to update you. We are having products with 3% increase of annuity every year. It's already there. So I would request, please look into it. You are with us, so we should go together for this product.
Can I just add one
An
point?
interesting business deal has been done here.
I will just like to add one point on the annuity side. See, this is, you're talking largely about, I would say post-retirement or at a point in time when I don't have any employer covering me for multitude of things which I took for granted when I was employed. I think going back to his point of treating it like a, what is it, what support are we giving for the lifestyle, which includes annuity, but we are forgetting things like long-term care. And my biggest problem right now is I am, my parents, for them, I am the long-term care. But I'm not too sure what kind of a long-term care I'm going to be getting. And right now, all of us feel healthy, but you do not know what is the kind of onset of diseases that we're looking at, and Alzheimer's or dementia, whatever. I will not be in a position to actively invest or look at large cap, mid cap, small cap, etc. I need some kind of a support when I'm able to look at all these angles. And long-term care is something very, very important. Is there any kind of a product that we can have where I start saving towards that while I'm working or while I'm in a position to contribute to it so that it takes care of things for me later on? Because annuity, it's not just about buying your dal chawal and milk, etc. It's about taking care of everything which you took for granted when you were employed.
So I was asking you about cyber.
Cyber, yes. So cyber, there is a very interesting dilemma. The dilemma is as follows. For most Indians, the cyber is related to UPI because they actually don't have, not many people have laptops and all that, right? Most middle class people. Now in UPI, the challenge is that mostly people give the OTP themselves. So they are tricked into giving the OTP and then the so-called fraudster takes away the money from there. Now in insurance, what insurers will say is that you gave the second factor yourself, so we cannot insure you. So it's a circular argument right now. So if you see the cyber policies today, that is one of the biggest flaws that is there. We are working with some companies, and in my opinion, if we can break this, because you have to be careful. If you don't do it carefully, then you could get completely overrun by claims. But this is the fundamental dichotomy right now for a customer. And I think that is something that if we can solve, which we must solve, then cyber will definitely pick up if we are able to solve this dichotomy. Home insurance is a very difficult question, sir. Home insurance normally works when there is a mandatory requirement. So if you see in the US, if you don't have home insurance, your credit score goes down. So that's why there is of course, it's a much more litigious society also, so there is a legal side to it also. But right now in our country, the biggest challenge is it's not mandatory, and there is no linkage to credit score, etc. So I think it's a very, very difficult product to sell. It's a very useful product. We should sell it. Obviously, we can do more in terms of explaining the product, claims, etc. But if you ask me for large-scale adoption of home insurance, we will need some push from somewhere.
Yeah. Amitabh, Sarabir was mentioning that home insurance, there's a need for a mandate. But do you think if we come out with a very simple product, it can pick up in the market? Can you say 10 lakhs sum insured, loss limit? Any losses up to 10 lakhs will be covered for various
Yeah.
one-page policy.
Yeah, I think the challenge is again, how much we have actually paying for distribution in the end for the 10 lakh cover, right? And how much the premium, people again need to see some value out of it. But essentially, I think if I look at my society and, they buy the structure and, somebody in the society office just signs off. Nobody even is aware that, they have a structure cover and there is no cover for AC or the contents and everything. And the incidents are pretty low, although they are increasing if you look at it, the number of fires. So it has to be a product which is embedded with part of home contents. I am very clear about that. Most of the home, fires develop from AC or the kitchen. So you have to embed that sort of a service of insurance with the product at the time of the sale. At least you can penetrate a bit more. Or something, or short circuits, maybe you have to embed with the electric bill. Otherwise, it's almost nobody is interested.
So, Ratnakar, this takes me to this embedded products. I've really not seen much of life insurance as an embedded product. Non-life side, they are there. Do you think that some product innovation is?
It's almost on the anvil, sir. We are thinking of something, embedded insurance for a group particularly.
Right.
So whenever some utility is bought, can something be embedded upon it? So it is being actively considered in LIC. So embedded insurance, unless this comes, sir, we cannot reach the goal of insurance to all by 2047. Whether you like it or not, you have to have embedded insurance to cover the entire population. So we are actively considering, sir, and maybe soon it will be coming out.
So, Sarabir, I just would like to ask you on this embedded insurance. The market has been doing it in the non-life space. It's becoming very popular. But the utilization of the embedded policies is very, very low. Then is the industry doing the right thing? Just selling a policy, no claims. Distributor gets probably big amount as his commission. The insurer makes profits, the customer gets nothing.
Sir, in our opinion, embedded policies are a terrible idea. I'm sorry that I'm going against some of our panel members. It is, as you correctly said, embedded insurance is only good for the platform or for the person. In fact, it's not even good for the distributor, frankly, because normally it's the platform who takes most of the money. The loss ratio on the product is less than 10%. In my opinion, any product which doesn't have a 60-70% loss ratio, in fact 70-80% loss ratio, should not be allowed to be sold in the country. That means basically you're taking money from the customer and using it to enrich other people. I think that this whole, I find it very ironic that while on one side we talk a lot about distribution cost, on the other side we want to embed the distribution cost. We want to give the money away to people who are not going to do anything with it. So I think we should take embedded products with a pinch of salt. Largely you will find that in all embedded products that you buy with your phone, etc., the utilization is either very low or impossible. Meaning you have to give your phone for 2 months to some service center in Thane. There's no chance that you're ever going to do that. So I think embedded products are not a very good idea because of the reason you said, sir, that the loss ratio on these embedded products is very low. So effectively it means the customer is giving money to somebody else.
But I agree with you. I mean, I also said the same thing, but it's a great idea of taking policies to the people. Should there be, proper disclosures, proper customer education?
So with good loss ratios, then I think every product is a good product. If you give a product in a manner that the person who's buying it understands that they're going to use it or they can use it, then I think it's a wonderful idea. Because like you said, it's a distribution, right? We are able to reach. The example you gave of the Prime Minister's insurance scheme, the reason it was distributed so widely was also because banks were selling, right? You could, when you opened an account, a certain amount of money was deducted from your account. Correct. And that is interesting because it gives, even in Nagaland, the discussion that we were having, right? Yeah. They also have a similar term policy, a life policy also, where you just have to enroll, and if you enroll and if something happens, you get a certain amount of money. So I think those products which have good loss ratios are logical products. But I think we should be very careful in this words that we use, because sometimes it seems like embedded is good and other is not. Actually, it's not the case. I think there can be good embedded products. I'm not suggesting that all embedded products are bad. But I think we have to make sure that the customer is aware and is using the product. Otherwise, it's not a good idea.
Bring the price down to 60% loss ratio. No, if it's only 10% loss ratio and it is penetrating only 1%, maybe bring the price down by
I think
50,
the
60%.
point he's making is people don't even know that they have a product.
Yeah. So
That's the,
a
it just sold along with a loan. And, he just treats it as a cost of his loan. He doesn't even know there's an insurance product.
So with your permission, can I ask the panelists a question? Some of the other, the reason is we're talking about the new insurance bill, which is just sort of in the last leg. How do we see the entire concept of composite insurance license helping from a consumer standpoint, saying that, you get a holistic kind of, cover or addresses your needs holistically?
Because LIC was talking of health insurance.
As far as composite license is concerned, we will cross the bridge once we come to it. And we are good at a particular thing, we shall strengthen it further. This is what my personal view, need not necessarily of my corporation, but we shall strengthen what we are good at, and we shall find out, explore what it is in offer for us in composite license.
I come to the last two questions. One is to you on the use of data, AI in designing products. You were also talking of predictive modeling, and what is your view on this? Because you do number crunching and.
Yeah, so we've been using data all the time, I mean, obviously a lot of quantitative data is what we are using. What perhaps AI would help us with is doing it faster, getting insights which would otherwise take time or which we would have missed. But I think we have to tread a little carefully, because things like hallucinations, we're hearing a lot relating to AI, right? How do we make sure that the right kind of decisions are taken? Is there any bias which is inherent in the data, which right now, you are because you're looking at it at different levels, you're in a position to understand what is the kind of bias we're talking about. But when you are having a system doing a lot of the analysis, are we missing out that bias? Because that bias would eventually, dictate the kind of products that we are developing, dictate the kind of pricing we are doing. So, I would say it is something that we welcome, but let us not miss out the human intuition and the human element when we are trying to analyze that data.
So this is the last question to Sarabir. I think I come to health insurance, and you are the largest distributor on especially retail health in a big way. Do you think that we have done enough in terms of product innovation on health insurance? Or is there something more? I know it will all be evolving, but what is it we need to do, especially in the wellness space?
Completely agree with you that. I completely agree with you that a lot more is possible on the health side, and I think the point that you referenced around wellness, and I think it was discussed in the morning also, that insurance has to play a role in prevention as much as it has to play a role on the indemnity side. So I think there is a lot that can be done, and again I think it falls under the same thing, that we have to incentivize the right kind of behaviors from consumers so that they also understand that there is no free lunch, that if you are not looking after yourself, then expecting that your policy will look after you and all claims will be paid will be difficult, or it will be costly. I think we have to make it costly for people who are careless about their health, whereas reward people who are careful about their health. So I completely agree. I think wellness has to be part of the system, and prevention has to be a big part of the system as well.
Yeah, thank you very much. A couple of questions from the audience. Yes. I thought some student will ask a question. Please, go ahead. No, Sanjay is asking. Yeah. It's not working?
Hello, yes, it's working. Outside India, in almost every market, outside hospital insurance, that is OPD insurance, is almost as big as hospitalization insurance. This time has come in India that India also has outside hospital insurance, and that can be as big as hospital insurance like any other market. That can be biggest insurance penetration. So is industry doing something big on that area? And adjacent question, the mental health insurance which Amitabh Ray touched upon, our parliament and IRDA passed regulation and laws around that it should be at par with physical health insurance. Last year we released a data report that of 12,000 premium which Marsh places alone, the claim on mental health was close to nil. But the reality is mental health does exist in the country, but claims doesn't come. It means there's a problem in the coverage. And we looked at 5 big reasons that the hospitals, the regular hospitals don't take mental health patient, and the mental health hospitals are not covered under the TPA network. And outside hospital claims are not allowed anywhere under the policy. So basically health policy claims on mental health cannot be claimed in India because hospitals which are covered in a network, they don't take mental health patient, and mental health patient hospitals are not covered in the network, and outside hospital, there's no claim covered. So basically, mental health is not covered in India. Is industry doing something to address this?
Saravir? Difficult questions, I would leave it to you.
No, I think on the OPD side, I'll just explain that I think we have to also be careful, Sanjay, as you know, that risk transfer must be a part of the equation. See, there is 2 parts of OPD. One is just cash flow. So if we can do cash flow, but I think cash flow is not insurance. There's no risk transfer. I think OPD as a part of an overall policy, which it helps in the risk side, I think is what I would suggest or what we believe. We can obviously have a longer discussion. Mental health, as you said, is exactly the problem as you described it, that while it is part of the policy, the usage of the policy is difficult. I think this is something that has to be addressed by the industry, and we have to get better at it.
Yeah, so I will just add a couple of sentences. OPD, I think, is picking up. So the problem with OPD was there was no proper infrastructure network to service OPD claims. Today, there are some insurtechs who are providing this. As Sarbir said, it should be kind of an overall comprehensive health insurance, covering both inpatient as well as OPD. Pure OPD, there could be an adverse selection, but I think this is how companies are coming out with products. So I am sure that within a very short period of time, you will see a big uptake as far as OPD is concerned. On the mental health, there is a mental block on the insurers. There is no doubt about it. I think either the insurers are not able to understand what is being covered. There's also a fear that will it lead to a lot of claims. I think this requires more discussion. Today, regulator has said we should all cover, and everyone is also covering. On paper, all the insurers are providing mental health cover. But then is it the right cover? Does it really benefit? Is something I think we need to work on.
Yeah. Namaste. Myself Manoj Kumar Saibra Borse. I'm a founder secretary of Saptarshi Foundation. We are working for the person with disabilities and their families on the similar line. We have innovated India's first one-stop solution for families having person with disabilities, which will reduce their 90% effort as far as the disability services are concerned. Again, on the insurance line, I'm also part of LIC family, and my father was also working in the LIC. LIC had designed the product, Jeevan Aadhar, and withdrawn the product in the year 2014, I think, for the dependent special children. Can LIC rethink on that line to cover the dependent children or the disabilities as per the RPWT Act? And as far as health insurance is concerned, there are regulatory guidelines now removed on paper. Again, on paper it's available, but practically only I think New India Insurance and few companies, the POCs, are issuing the health insurance. Again, premium and all these things are very challenging. On 20th of November, we are going to launch a white paper on the health insurance for the disabilities on the similar line. इंडस्ट्री का परिप्रेक्ष्य इसमें इस क्षेत्र में क्या हो सकता है, इंश्योरेंस फॉर ऑल में हम भी है क्या, ये हम जानना चाहते हैं. थैंक यू.
The first part, as far as LIC is concerned, we had a very good scheme, Jeevan Aadhar, and we had closed that, but we are getting feedback from different parts, and we may come out with some product. We are working on that for Divyang dependents, physically challenged dependents. उनके लिए कुछ खास पॉलिसी के लिए हम लोग सोच रहे हैं.
In the interest of keeping to the schedule, we will need to wrap up this segment. Sorry everyone, the Q&A session can't take place due to paucity of time, but we urge you all to use the lunch time for this segment. Thank you so much.
So, I didn't understand what you said. Time is up, is it?
Sir, actually to keep the schedule, we need to shift the Q&A session to some other time.
Okay. So I think we can discuss offline.
Yes.
Right, okay. So we'll take one final question from the students.
Sure.
This is reserved for students. Oh, yeah.
Hello.
Yes, yes, go ahead.
So good afternoon.
Only one at a time.
So good afternoon panel. My question is that we are discussing a lot about customer-centric approach. So I just read somewhere that from a customer only that if for a customer we make an insurance product, the people who are in the claim side should be the ones selling the insurance policy. Then a customer will be able to know on what basis they will not get claims. And the persons who are selling policy, agents, should be the one who are handling the claims. So they tell you that what all is covered. So what's your take in that?
No, I think, see, I mean, let's forget this claims person, agent and all that. What you are trying to say is there should be an overall view. I mean, it should not be that, you know, one part of the company sells policies without any obligation to settle claims. The other one designs a product in such a way that there are no claims. So I think the whole insurance industry, including all the stakeholders, need to be customer-centric in the design of product and also servicing of products. I think that's the point. That's a very good point you made, yes. So thank you very much, and all the best to you.
Ladies and gentlemen, we now conclude the first round of truly enriching and thought-provoking discussion. Our heartfelt gratitude to all our esteemed panelists for sharing their profound insights and visionary perspectives.
I now request Mr. P.R. Mishra, sir, Chair Professor, Financial Inclusion and Social Security at the National Insurance Academy, to kindly present mementos to our distinguished panelists as a gesture of our deepest appreciation.
Thank you everyone for your attention and engagement throughout the session. We will now break for lunch. I request the ushers to guide our speakers to the lunch area, which is on second floor. Lunch for delegates has been served across the hall. Students, kindly wait for the delegates and then proceed. Please enjoy your meal, and we look forward to having you back with us at 2:30 p.m. sharp.
We request all the students to please be seated for 15 more minutes.